What's going on YouTube? It's your boy Billionaire Brick, and we're back with another video, man. Back with another video. Back with another video. Check me out, check me out, check me out. Don't click off, check me out. Hit me out. What about I say? Okay. 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 Alright, man, let's get to it. Let's get to it. It was I started with alright. Good little melody, man. But today we finna go over Asian session. London session, the trade I took this morning from 2 to 5 a.m. We finna go over higher time frame analysis. So basically, let's get straight to it. So here we go. So I took a sell today on US30. And the reason why I took a sell is because the hour 4 chart, the 4-hour chart was giving me bearish sentiment. So basically, once price came up and took out this buy side liquidity, we dropped down. We took out this sell side liquidity below these lows right here. Below these lows right here. Basically came and stopped them out. We created an hour 4 fair value gap. So once price was coming up, Asian session, London session, I seen that we tapped into this hour 4 fair value gap. I'm like, I need to be looking for sales and targeting what? This sell side liquidity right here. This sell side liquidity right here below this low of this hour 4 candle. So basically, once I had my bias for the day, which was this sell right here, I simply went. So this was my drawn liquidity, essentially. That means that based on my high time frame analysis, that's where I was expecting price to go. Don't worry about this move right here. And I know a lot of you people just keep looking at this, but it overall went up. Who the fuck cares? Do you want to be right or do you want to make money? All right, shut up. Because I want to make money. I don't want to be right. And as you can see, I made money. So it don't matter. It doesn't matter as long as you make money. It doesn't matter if you was right or wrong. And I'm not saying I was wrong, and I'm not saying I was right. I'm just saying, do you want to make money or do you want to be right? So, boom. After that, I went to the 15-minute chart, man, and I drew out. So, I had my drawn liquidity, which was down here from the higher time frame. I have my Asia's high and Asia's low. So, I trade between 2 to 5 a.m. And I look for, if I'm selling between 2 to 5, I look for price to break Asian sessions high or previous days high. I look for market structure shift with displacement. So basically, when I came into the market, it was 2 o'clock, and I seen that we had already took our Asia's high early, and we started consolidating. So once I seen the consolidation, I said, okay, let me go in that consolidation on my entry time frame, which is the 2-minute, and let me stalk price and wait to see after 2 o'clock will a low be broken with the fair value gap. So after 2 o'clock, we have a low that was broken right here at 232, and then it came back into the fair value gap at 238. So I literally sold right there. Where that circle at, that's why I press sell at. Why? Because of everything I just said. It's that simple. It ain't nothing to it but to do it. So, I'm going to show y'all a trick. So, basically, this is where I entered at right here for a sale. And this is where I got out at. I made like $1,500. I got out right there. I made like $1,500 in like 45 minutes. But as you can see, even though I got out right here, what happened? Price came and took out that higher time frame drawn liquidity. And then what did it do? Took out this sell side liquidity, and then it reversed. Took out this high, and it just went up to do what? It went up to take out the buy side liquidity above this high right here before it dropped. No way, it really moves like that? Yes, that's how it moves. But let me show y'all a trick. So once I enter on the 2-minute time frame, this is how I trail my stops. I trail my stops based off of gaps, fair value gaps. So we have a gap right here. gaps or fair value gaps. So I go up one time. Well, I'm tripping. That's the 2 minute. I go up one time frame. So let's say I sold right here and price started dropping. This is my area that I want to get out at. I go to up to the 5 minute, and basically I entered off of a what? Fair value gap. Right? So every time a fair value gap is created, it doesn't have to trade it. It doesn't have to trade up to it. But it's two ways you can do this. This is the way I do it. Every time a fair value gap is created, I move my stop loss. So let's say my stop loss was right here. We're gonna put red. We're gonna put orange. Red is a low frequency color. So let's say my stop loss was right here when I entered, which it was. It started dropping on the 5 minute chart. It created another fair value gap. I would have simply put my stop loss right here, above the high of the first candle that made the 5 minute fair value gap. I don't care if it trades up to it or not. Boom, I'm watching price. I see another fair value gap was created. What am I gonna do? I'm gonna move my stop loss right here, above the high of the first candle that created the fair value gap. I don't care if price comes back up to it and trade it. What we have right here, 5 minute fair value gap was created. What am I going to do? I'm going to simply move my stop loss right there, above the high of the fair value gap right here. And that was it. That was the last fair value gap. My stops would have been right there, right? Until price hit me out right here, or until price came and took out that draw liquidity down here. So basically, that's how you supposed to move your stop loss, bro. You supposed to move your stop loss based off the fair value gaps until price hits your TP. Or at least that's the way I do it. So as you can see, we caught a nice trade on that 2 minute chart for US30. And as you can see, the trade finished between 2 to 5. Made like $1,500 in 40 minutes, which is quite crazy in my opinion. This was easy money right here. If you couldn't see this consolidation, Asia's high, it don't want to break through it. You get what I'm saying? I could have entered. Now don't get me wrong. No, I couldn't enter right there. But after 2 o'clock, that's when we start them entries. If it ain't 2 o'clock, we're not looking for nothing yet, because it's more high probable when it's between 2 to 5 a.m. And like I said, between 2 to 5 a.m., there's a 75% chance that price will make the high or low of the day. As you can see, the low of the day was made between 2 to 5 a.m. This was the lowest point of today. And as you can see, price rises up. It just rises up. You see that? Imagine if you could catch the low or the high of the day. This wasn't the high of the day, but this is why I caught it all the way down here. I could have been looking for a buy down here, but that's not a part of my strategy. Once I make money on my first trade, I'm done for the day. But imagine catching the low of the day and just riding it out. That's crazy. You would have to be patient to do that, but that's crazy though. Like, you could have caught a buy down here. And you could have aimed for this high right here. This high right here. They would have gave you an 8 to 1. And it's like where price at right now. It's right here. They'll give you 11. It came up right here. A 12 to 1. That's crazy, bro. So it's like, even though overall throughout the day my direction was wrong, because as you can see today was bullish, I still made money because I was in coordinates with the higher time frame, and I knew that it was finna come down from this hour 4 fair value gap to reach for this drawing liquidity. Now I could have simply waited till it got down here after it reached the draw liquidity and entered for a buy, because once it gets to draw liquidity, it's gonna reverse. But since I seen we took our Asia's high, I just called it for the sale, and we also took our Asia's low. So when price got down here, for the draw liquidity, how would I have entered? Let's see. I would have been okay. We took out the draw liquidity. I would have simply waited for a swing high. I would have went to the 5 minute, because the 2 minute choppy. I would have drew this out right here, but I wouldn't have got filled. I would have liked to see that. So into that before taking off. But as you can see, I didn't get filled. Oh, why you choosing that fair value gap? Because when this high was broken, right there, that's the first fair value gap, or that's the last fair value gap that was created. So I would have simply been entering right there, or I could have entered off of this right here. It's like a fair value gap because it's like a little gap in there. So I could have entered on that one on the 5 minute as well, and that would have been an entry right there, and I could have just rolled it out back up to these highs up here, and that would have gave me, oh shit, that looked like an 8-1, but it might be more because I would have put my stops right here. Oh no, that ain't no 8-1. Aim for this. That would have been a 3-1, which is not bad. Risking 1,000 to make 3,800 basically in one trade. That's not bad. So yeah, man, I basically just wanted to make this video. I wanted to be transparent, and I hope it was insightful. Basically, just wanted to talk about higher time frame analysis, and using that higher time frame analysis to depict your trades on the smaller time frames. You just simply aiming for the drawn liquidity that you found on the higher time frame. You're just going down to the smaller time frames and looking for everything to align in that direction. And it's literally that simple. So that's it for today's video. With that being said, it's your boy Billionaire Brick. We out.